Hello, everyone. Thank you for coming this morning and attending this particular session with all the choices you have for today. So I'm going to give you a talk about blockchain, payments, and regulation. Just up front, I would like to mention the 3 points I would like you to go away from this session with. The first one is there is an ongoing revolution in the payment industry, and blockchains are just a part of it. And so the topic is we need to be competitive with other players in that field in order to take part of this payment revolution. And at the moment, we don't have the most market power among the players in that field, so we need to be aware of that, even if the technology is elegant and probably efficient. Secondly, the second point I would like to go with is that regulation are not just a set of rules that are set in stones and you have to follow at the end of the project. On the contrary, I engage you to think up front about regulation, because it is as well an opportunity, especially for the kind of technology we are working with. And it's also something that's about to evolve. Like all the regulators everywhere in the world are watching the space and trying to adapt their legislation. So it's not only a question of looking at what are the rules we need to follow. It's like to understand what are the rules, why they exist, and what can we propose, either by proposing new rules and also by proposing how our technology provides the same services than the objective of the regulation. And thirdly, I think we really need to have global initiatives about regulation in the blockchain space, but that takes into account all the local specificities. Like each region has a different way of approaching the regulation and different objectives, and we need to take that into account. I see and I participate in many think tanks and groups about that, and I feel like often it's a failure of like trying to design a generic set of rules and principles that don't apply to each specific region. It's tedious, but it's necessary. So a few words on me. I used to study computer science and business public law, which at the time didn't make sense. So it was definitely an error of choices. But now it seems to be quite useful, so I'm glad of that. Currently, I'm working in different activities. The main one is I'm working for a research group that's called Blockchain Perspectives, which this institution is part of, the CNAM, and also CERSA, which is a laboratory, CNRS Paris 2. And also, I participate in a group that's called Smart Contract Academy. It's a think tank about blockchain and law, and we have been working on that over the past months, and also consultancy activity. So a few words about payments. So a payment is pretty straightforward. You have a product you would like to buy, for instance, an ice cream, and you just want to send money in exchange for the good, and that's what you want to do. The process is generically you contact your bank and you say I want to make that payment to this person. The payment is arranged between the bank, and the bank then tells the merchant the payment has been processed. As you know, it's always a bit more complicated than that. The banks don't operate the payments among themselves. They have a service provider that are the ones that actually make the transfer. And actually, it's more complicated than that, because between these payment service providers, there are many steps. So that's the error in the middle that makes the payment process. But also there are additional services. For instance, when you trigger the payment, it might not be just you paying with your card that's triggering the payment. You might be using, for instance, Apple Pay. And so Apple Pay is another company that is going to contact your bank and tell, so that's the first symbol on the left, it's going to tell your bank, okay, this person wants to make this payment, and then your bank is going to contact the service provider that's going to send the transaction, and then it's going to go to the bank of your merchant, who's going to get back. And that's still a simplified version. Also, with this complex ecosystem, there is a lot of people who get paid and a lot of different fees they get paid. You pay for having credit card, so a monthly fee usually. Like the bank pays the service providers. The bank pays also a fee to the credit card company like Visa or MasterCard for having a license. And the merchant also is paying their bank for doing that. So that's how the process is messy, but also it's becoming more messy because we have new players coming in that field. This is driven by the customer that wants new services, they want new payments that are more easy and faster, and so you have new product and startups coming in the space. You have also a lot of players that are consumer brands, like for instance Starbucks or any supermarket that want to get involved in that space. So they propose a card and payment system, and they try to also participate in that. You have all the fintechs, also the GAFAM, so I mentioned Apple Pay, but all of them are providing different payment solutions, and as well as manufacturers of the mobile phones, of any IoT device that also gets involved in the payment. So the space is becoming more complicated. So far, a Bitcoin transaction seems way more simpler. You just are directly sending the transaction, and actually that's basically it. But in real life, it gets also more complicated. For instance, when a merchant is accepting Bitcoin, usually they use also a service provider that's going to be the one that's received actually the Bitcoins and then send them the money to their bank account. And that's just a bit of it. But what's even more interesting with what we can do with blockchain technologies is this smart contract vision. I'm sure some of you have read the Nick Szabo paper on smart contract. Who has? Okay, cool, a fair amount. What's really clear in his paper, so what's fascinating is Nick Szabo paper was written way before Bitcoin in the 90s. And he's explaining his vision of smart contract, and he explains that the vision of smart contract is to have a system like a vending machine that makes that to retrieve the physical good you want, like when you're buying a chocolate bar, you can have the chocolate bar only if you make the payment. And also the person who is selling the chocolate bar knows that you can't retrieve the chocolate bar unless you have made the payment. So that's simplifying all the processes we have seen before in the sense that you design once how it's going to be working, the payment processing, and then it's going to be working again and again in the same enforced way. So that's one of the really interesting kind of solution we are able to provide using Ethereum technologies. So now let's move on what are the key regulatory objectives regarding the payment industry. The first one I see are to guarantee payments. So this is a first challenge. As you have many players involved in payments, you need to make sure that the payments are done and well done. So the challenge is to mitigate the operational risks, but also to assess liability. For instance, if a payment doesn't go through, who is responsible? Who is in charge of sending again the information? Who's going to have to pay the customer if there has been a failure? In general, we expect that whatever happens in the back end, anyway, the payment is going to go through, and they're going to solve among themselves that. But then that's a huge legal complexity to organize all those participants. The second category of regulatory objectives are to protect user data. As you have also many players participating in this space, you need to make sure that the data of the customer is protected. And actually, it's becoming more and more challenging because each of the participant, each of the service providers is actually having all the information about your data and about this specific payment, but also sometimes about your bank accounts and prior payments. So that's a huge risk. And it's increasing exponentially with the as many players are coming in the space. So it's both like legal objective, but also to make sure that the data is securely stored. And then the last two categories, well, the first one is pretty big, is to avoid illicit activities. So that's what we mentioned by anti-money laundering. So each time somebody has used money for illicit activities, they shouldn't be so easily able to reuse them in the regular markets. Also, terrorism financing, that has become pretty huge over the last years. For instance, in Paris, we had the Paris attack in 2015, and in the following months, there has been many working groups in enhancing the capability to identify money that comes from terrorist activity, because that's what has been financing some of the activity that was responsible for those attacks. And also, among other illicit activities, there is tax fraud. So this could be a category by itself. And especially when we talk about payment, there are the general question of taxation. Just to clear the scope, there are two basic tax that could apply when every time you make a payment. The first one is VAT, so it's when you buy a good, you usually have to pay a certain percentage for the states, and the other one is income tax. So the income tax is a bit more tricky, is because as you bought your cryptocurrency and it was just a mean of payment, at the moment you're redeeming your cryptocurrency, you are actually might be doing a benefit compared to the price you bought your cryptocurrency in the first place. And so at that moment, when you're making that payment, you should have, you should take that into account and report it at the end of the year for your income tax. And for those two categories, then the question and the legal discussion, and it's different depending on the country, is to assess, like, at which moment are you buying a good? So is the cryptocurrency the good, or is the end service you're buying the good? So that's for VAT. And on the opposite side, for income taxes, when are you making a benefit on what you bought? And so then promote a fair and open markets. That's definitely a more European-centric. Actually, the two lower points are more European. So because one of the purposes of the regulation, especially in this industry, is to allow to have new participants and a vivid market. So I'm going to present a few regulations about the US, Canada, and Europe, which I have studied a bit more, but it's just a small overview. So in the US, it's been clarified in 2013 by the Financial Crime Enforcement Network, which is a department of the Treasury Department. That's when exchanges and everybody that's doing payment processing in Bitcoin should be considered as a money transmitter. So this has two consequences. Being a money transmitter, it's also considered as a money services business, which require them to be registered at the federal level and to comply with a certain list of obligations. The money transmitter also impose them, if they want to operate in a specific state, to get a registration in each of those states. And this is actually a pretty huge challenge for a lot of companies, because you have to go to each regulator of each of the, so I think it's 950 states and the territories. And so it costs literally hundreds of thousands of dollars to get all this registration done through. in Canada, they have done a pretty comprehensive law about money laundering in 2014 that really clarified that dealing with virtual currencies, you are considered as a money service business. So the same, you have then to go to registration, you have reporting obligation. So reporting obligation is every time you see a suspicious payment, you should be reporting it. And especially you have a specific kind of people, like foreigners and that are, and also people in high office in administration, that you when there is a suspicion payment, you need to report more precisely. One good thing that makes the Canada regulation, and it's pretty general in over different regulation they have, is that they make a lot of aspects pretty explicit, when in most countries you have to deal yourself. For instance, the ID requirements, like in most countries, you impose to the person doing the payments to do some KYC, to know the customer and make some assessment on who they really are. But usually there are not really specific rules that say that when do you know exactly who is your customer and when you don't. And in the Canada, it's explicit, like you need this kind of paper and this kind of information, and then you have a good, you can say that you know who is your customer. And tax is, as I mentioned, every time you do a purchase, it's considered as a barter transaction, and then you have to pay an income tax on that. In the EU, so regarding the objective of anti-money laundering, you have a directive in 2015, which imposed the same kind of rules, so risk assessment, due diligence on your consumer. There is also a central beneficial ownership registry. That's pretty interesting. The idea is to have for every legal entity who is the final owner of this legal entity, because often you have different layers of shadow legal entity, and it's difficult to know who is actually making the payments. And so they have a central registry to try to do that. It's, I think, done at each state level, and they try to have some harmonization around that. Also, on the VAT side of things, it's been clarified by a court ruling in 2015, and explaining what was payments, and actually the case was somebody who was buying Bitcoin and reselling them online, and the question was his activity a service that was taxable by VAT? And it was considered that it was just providing a payment service entering in a specific category that made that it wasn't subject to VAT. Also on the privacy side in Europe, so we have the GDPR. You probably all have heard about it at this stage. It's going to come into force the 25th of May. This is a really interesting piece of legislation, because actually it's probably one of the laws that requires the most to developers to be aware of it, because it's not just a rule you have to respect in the end. It's every time you're processing data that has some personal interest, or data about a specific person, you need basically to tag your data and know where is the data about this specific person, in order to be able to retrieve it if the user demands it, in order to be able to delete it in the end. So obviously when we are dealing with Ethereum project, that's also a challenge, because you need to think on how you're going to store the data about your user, and personal data is not only the name. Like, it's been a long trend of court ruling that explain that personal data is anything that also identifies somebody. If you have a lot of information about somebody, like the displacement or the payments, at some point you're able to identify this person, and then you have to respect the two rules. then you have also the other side of European legislation that's particularly relevant for that is the PSD2. The PSD2 is the idea more generally so it's rules about payments services providers, but more specifically it's also designed to try to open the market in this field and to force banks to have more accessible data entry points for startups. So I understood that there are limitations because, for instance, the regulation doesn't specify how available should be the data, what are the APIs requirements, how fast should be the data, and that's at the moment forbid a lot of new entrants to participate and engage. But ideally, you would have the bank that holds the account and allow anybody and any other service to provide a connection with the information they have and to trigger payments and so on. So what is missing at this stage in the space for having useful payment solutions? So to me, the first category of what's missing is privacy solutions. So I know there are many projects working on that, but it's still a huge challenge because every time you're making a payment, and especially once we will enter the idea of micropayments and streaming payments, so recurrent payments on an ongoing basis, you're going to need to be able to make sure that this data is not publicly available because it's private data. This is just the example of the electricity consumption. You know, there are a few startups that are working on using blockchain to make payments every time you're buying from your neighbor the energy from their solar panel. So you could have a micropayments system to just pay the electricity as it comes, but then you need to make sure that all those payments are not publicly available. A second, a big challenge, and I really feel like that something is missing is cyber physical security. We have currently, I think, one company that's in that space, kind of, and to me it's the main challenge because what we are dealing with is systems where, so sure, the blockchain makes the transaction and the ledger coherent and provide security at this level, but then what's weaker is all the endpoints. In a regular banking solution, you have the bank that is like a castle, and they have all the information of the users, and they give the accesses, but they control where is stored the data, and the entry point is controlled internally by the bank. But in blockchain system, nobody is controlling who is making a transaction, who is adding a transaction, who is reading information also. And if we want to have solutions, and many use cases are here, especially anything that's involved with IoT, we involved at some point to have a physical device that's going to record some information, that's going to process the payment, and you need to make sure that this physical device don't get corrupted. So there are many solutions and existing research and also companies but this is a huge space for any solution that would use Ethereum for any kind of payments using IoT. Then identity and authentication, when we were mentioning PSD2, for instance, it forces all the participants and the service providers to authenticate at each stage to, you know, as I mentioned, like you have the liability issue, you need to make sure every time who is interacting with who. So it's not only the user, so the identity solution I see at the moment are really like just, I have my own identity on the blockchain, that's something useful, sure, but then we need also to have a lot of more efficient solutions on if we have a particular service provider at some point, like how we can make sure that this identity. The only relying on being able to sign a transaction doesn't suit in a lot of use cases. Then what's missing also is international initiatives. Currently, I'm really surprised how many regulators and also even initiatives are just focusing on one country, one region, and trying to develop their own regulatory framework. When we are talking about payments, we need to have interoperable solution, and so any regulatory ID should be working at a more international level, but it's also working in having the existing stakeholders. For instance, in the energy industry, you have a lot of players that are not only in the payments, but also like who's producing the electricity, who's managing the lines, and so if we want to be able to use blockchain technologies in large industries, we need to have a work with existing players and in order to develop a coherent solution. I see too many startups just trying to develop a solution that's nice, that's fantastic, but if it's not implemented with all the existing players, it's never gonna work. And then, of course, there are the scalability solutions, but I'm sure we have a lot of talks in this conference about this. But this is definitely a challenge for using meaningfully payments. Thank you for your time, and yeah.